How does a company synonymous with classic tangible joy, think Monopoly, Play-Doh, find its unexpected, well, magic in this wild digital age?
Yeah, especially when navigating, all the complexities of global economic shifts.
That's the intriguing question we're diving into today.
It really is a fascinating study in corporate agility, isn't it? A company with, what, a century of history in physical play.
Finding explosive growth by skillfully embracing these new frontiers.
hmm Absolutely. And that's precisely what we're going to unpack in this deep dive. Hasbro's Q2 2025 financial results and their ambitious playing to win strategic plan.
Right. We're aiming to move beyond just the headlines.
Yeah, to reveal where this legacy company is experiencing phenomenal growth, how it's adapting to external pressures, and most importantly, what these insights tell you about the evolving landscape of play and entertainment.
And our insights today, they come directly from Hasbro's second quarter 2025 earnings conference call.
And their official Q2 2025 financial results press release, so solid sources. Definitely. This isn't just about, crunching numbers. It's about understanding strategic transformation in action.
How companies can pivot, really.
Exactly. How they can truly pivot in such a dynamic market.
Okay, let's unpack this then. Hasbro is already halfway through 2025.
Right.
And the big takeaway seems to be they are performing ahead of expectations,
Which is pretty strong validation, wouldn't you say? For their playing to win strategy.
especially since they only launched it back in February. It sounds like they're hitting their stride much faster than maybe even they anticipated.
Well, what's truly fascinating here is that despite, a challenging global consumer landscape, their overall strategy is clearly yielding tangible results.
Okay, so financially, what does that look like?
Their net revenue was essentially flat year over year at $980.8 million for Q2.
Okay, flat might not sound super exciting on its own.
But it's part of a very positive momentum. They've seen a healthy 7% increase year to date. So the trend is upward.
Right, context matters. And it's not just about top-line revenue either, is it? Their adjusted operating profit.
Hit $247.1 million. That pushed their adjusted operating margin to an impressive 25.2%.
Which is what, a 20 basis point improvement over last year?
Exactly. So a nice little uptick in efficiency there.
And adjusted EPS, earnings per share.
That rose to $1.30. That's a 7% year-over-year improvement. Pretty solid indicators of profitability.
Definitely solid.
Indeed. And it speaks volumes about their confidence. They're not just performing well.
You're raising guidance.
They are raising both top and bottom line guidance for 2025 and reaffirming their midterm outlook, too.
So, total revenue expectation now,
They now expect total revenue to grow mid-single digits in constant currency.
which is an upgrade from up slightly, right?
Correct. That's a pretty significant upgrade for a company Hasbro's size.
And the margin forecast?
Adjusted operating margin is now forecasted at 22%, 23%, up from 21%, 22%.
Okay. And adjusted EBITDA. That's earnings before interest, taxes, depreciation, and amortization.
Yeah, a key measure of core performance. That's also getting a bump. Raised to $1.17 billion to $1.2 billion.
So, what are the primary engines? What's really driving this outperformance?
It really boils down to a few key areas that validate their strategic choices.
Okay.
They're attributing this strong showing to, quote, exceptional results from our Wizards of the Coast business.
Ah, Wizards. We knew they'd come up.
Absolutely. Also, continued strength in their licensing and digital segments and a steady, long-term approach to navigating a complicated and evolving macro environment,
So it's their strategy working, the plea-focused, partner-scaled strategy.
translating into tangible bottom-line outperformance.
Exactly. You mentioned Wizards of the Coast. This is where it gets really interesting because that's their undisputed growth engine, isn't it?
Oh, without a doubt. The Wizards of the Coast and digital gaming segment continues to be Hasbro's primary growth engine. It's just firing on all cylinders.
The numbers must be pretty stark.
They are. Revenue increased a significant 16% in Q2 to $522.4 million.
Wow. And year to date?
Even better, a remarkable 28% year-to-date, reaching nearly $1 billion at $984.5 million.
Almost $1 billion already this year just from that segment.
And crucially, this segment also maintains exceptional profitability. We're talking a 46.3% operating margin in Q2.
46%. That's a huge profit driver for the whole company.
Massive. And leading the charge within that, of course, is Magic, the Gathering.
Okay, let's talk Magic. Phenomenal growth, right? 23% year over year in Q2.
And an even more impressive 32% year-to-date. They're describing Magic as Durable, diversified, and accelerating.
Durable, diversified, accelerating. That's quite the trifecta for any product.
It truly is. And the success of their new sets is a key driver here.
Like what?
Well, Tarkir Dragonstorm is apparently on pace to become the top-selling Magic Premier set of all time.
Okay, that's big.
But the real standout, the one everyone's talking about, is Final Fantasy.
From their Universes Beyond portfolio.
Yes. It's already the highest-grossing Magic set ever and the biggest Magic set in our history.
And here's the fact that just made my jaw drop. That Final Fantasy set generated, what was it, $200 million?
An astounding $200 million in revenue.
In just one day.
One day. Think about that. Its predecessor, the big blockbuster Lord of the Rings set,
Took how long?
took 6 months to reach that same figure.
6 months versus one day. Wow.
They even admitted they left demand on the table because it was just so overwhelmingly popular.
What does that kind of rapid revenue generation tell us about, blockbuster launches in this space?
Well, that kind of rapid, concentrated revenue is more than just a record, isn't it? It's a profound insight into, peak consumer readiness.
And the power of the right IP collaboration.
Exactly. When a highly anticipated crossover hits the market with effective distribution, the demand can be almost instantaneous. Overwhelming, even.
It also highlights the strength of their direct-to-consumer business, right? Secret Lair.
Definitely. Secret Lair delivered its strongest sales quarter in its history.
And it's not just the new stuff, the older Magic sets.
Remarkably, Magic's backlist sets, the older releases, have already set an all-time annual sales record just 6 months into the year.
6 months in. That really highlights the deep, lasting value of that whole 22,000-plus card system.
It absolutely does. Shows
Wow.
incredible loyalty.
And engagement from the community. Speaking of which, MagicCon Las Vegas.
Drew record attendance. Over 19,000 badges sold.
19,000.
And the Wizards Play Network, that's their network of local game stores and event organizers, keeps expanding.
Probably right.
Yeah, nearing 9,000 locations now. Organized play has seen a nearly 40% year-over-year increase in unique players.
40% jump in players. That's bringing new energy and deeper connection to local communities, as they put it.
Right. And that Final Fantasy set even set a new record for new player growth.
How so?
Pulled in more new players in its first 2 weeks than any prior set managed over an entire season.
Incredible momentum. What about who's playing? The demographics.
That's also noteworthy. While the average tabletop player is, around 35, the average new player is typically 11 to 14 years old.
Interesting. So it's constantly refreshing.
And demonstrates that, as they say, Magic players just never stop playing. It leads to a truly multi-generational player base.
And those Universes Beyond IPs like Spider-Man and Sonic the Hedgehog through Secret Lair.
They're actively helping to broaden the game's demographics, reaching new audiences.
I also found it fascinating they're actively seeking IPs that resonate even wider, like with women.
Yeah, who currently make up about 30% of the player base.
They're even exploring romantic themes or K-pop bands.
Apparently so. It shows how far they're willing to cast the net for new players and how they understand the diverse interests of modern consumers.
It's not just a U.S. phenomenon either, right? Japan.
Oh, Japan is huge for them. Final Fantasy is already the second best-selling set of all time there.
Second best ever.
And expected to surpass Modern Horizons 2 very soon. Japan is clearly a goldmine of potential license partners.
And a learning lab, they called it.
A learning lab for trading card games worldwide, yeah. Universes Beyond is helping open doors for wider mass distribution, both there and globally. Key part of their international growth.
Okay, so tabletop is booming, but beyond the tabletop, Hasbro also has this ambitious digital pipeline.
Yes, that promises to reshape their presence in the gaming world quite significantly.
Their flagship AAA sci-fi RPG, Exodus, from Architect Entertainment.
That's progressing well, targeting a launch in the second half of 2026.
2026, okay.
They call it a bold step forward into premium digital storytelling. Should expect a major update later this year.
And it doesn't stop there. Dungeons & Dragons.
Right. They've inked an exclusive publishing agreement with Giant Skull.
Led by Stig Asmussen, the God of War 3, Star Fallen Order guy.
The very same. He's bringing a brand new single-player Dungeons & Dragons action-adventure game to life.
Built in Unreal Engine 5. Sounds premium.
Very premium. Aiming to set a new bar for narrative and immersion in the D&D universe.
So when do we hear more about all this digital stuff?
Expect to hear a lot more about Hasbro's digital game portfolio starting at this year's Game Awards in December.
Game Awards. Got it. This strategic move into high-end digital experiences It shows a clear intent to really dominate in that space, doesn't it?
Absolutely. It's a major strategic push.
So the Wizard's magic is undeniably propelling Hasbro forward. But what about another significant contributor, that licensing business?
Right. Often overlooked, but pulling its weight, especially in digital transformation. It's showing impressive strength.
Monopoly Go, for instance.
Continues its impressive run of user and revenue milestones, proving to be an enduring hit from their partners at Scopely.
The numbers there.
It contributed $44 million in Q2 revenue, $83 million year to date.
Wow.
And they expect $12–14 million a month in the back half of the year.
Who would have thought a digital version of Monopoly, the classic board game?
Would be such a massive earner. It truly speaks to how classic brands can reinvent themselves for the digital age.
And they're also moving into casino gaming.
Yeah, inked a new multi-party deal. Aristocrat Technologies, Bally's, Evolution, Galaxy Gaming, joining SciPlay.
So a 5-company partnership.
To expand their brands in that lucrative and high-growth market for digital and on-premise gaming.
So what this highlights is that their overall LBE, location-based entertainment consumer products, and digital gaming licensing
Is both growing and providing an important source of high-profit diversification for Hasbro. It's a really important, profitable piece of the puzzle.
Okay, so digital licensing, Wizards, all strong. Let's pivot, though, to the segment that's navigating some choppier waters, the traditional consumer products division.
Right.
This segment saw its revenue decrease 16% in Q2 to $442.4 million, down 10% year to date.
Yep.
What are the key headwinds they're facing there? And what does this tell us about the broader traditional toy market, maybe?
You've hit on something important there. The decline was, as they stated, primarily due to retailer order timing and market softness in select geographies.
Retailer timing.
North America was particularly affected, down 23% in Q2.
Why was that?
Retailers apparently shifted their ordering from direct imports to domestic suppliers, largely influenced by uncertainty around tariffs.
Tariffs again.
Hasbro expects much of this delayed ordering to be recovered in Q3 and Q4,
Okay.
but it really underscores the sensitivity of this market to external pressures.
Tariffs are a big piece of this puzzle, then. It sounds like they're a headwind, but maybe not as bad as feared.
That's the sense, yeah. The current duties are more favorable than they previously expected.
So the estimate now.
They're now estimating about $60 million in tariff expense, hitting their 2025 P&L, their profit and loss statement.
Which is the lower end of their prior range, right? $60 to $180 million.
Correct. So some relief there, but still a significant cost to manage.
And how are they managing it?
Precisely. They've activated a comprehensive mitigation playbook.
Okay, what's in the playbook?
Includes things like cost reductions, rebalancing our marketing spend, diversifying our supplier mix, and implementing some targeted pricing actions.
Standard stuff, but necessary.
Also includes SKU rationalization, streamlining product offerings, cutting less popular items, and stronger retailer collaboration.
Makes sense. And diversifying the supply chain away from China.
They're actively working on that, aiming to reduce U.S. toy and game volume originating from China from about 50% currently,
Down to
less than 40% by 2027. Even exploring more onshore production, like their East Longmeadow facility for Hasbro Gaming.
That's a pretty significant strategic shift. Building resilience.
Definitely.
Now, this all sounds like a big adjustment, and it leads to a pretty big financial consequence mentioned in the report.
Yeah.
A $1.0 billion non-cash goodwill impairment charge.
Yeah, in the consumer products segment during Q2.
For our listener, what exactly does a goodwill impairment charge mean in practical terms? It sounds dramatic.
That's a good question. It is an accounting adjustment. Importantly, it's not cash out the door,
Okay.
but it reflects a significant downward revision of the expected future earnings for that part of the business.
So an acknowledgement of lower future value.
Essentially, yes. It's an acknowledgement that due to factors like the ongoing tariff impacts and a revised long-term outlook for consumer products, the value of the goodwill, that intangible asset representing brand name value, customer base, patents acquired previously, has been reduced on their balance sheet.
Got it. So a signal of the long-term impact of these pressures on that segment's valuation.
Exactly. Now, in terms of inventory and the holiday outlook,
Yeah, what's the situation there?
company-owned inventories are up year over year, again, due to tariffs, foreign exchange, and that planned shift to domestic fulfillment.
And retailers.
They are delaying holiday inventory builds and pushing shelf resets into Q3, which definitely weighed on Q2 revenue.
So a cautious approach all around for the holidays, it seems.
Very much so. while consumer sentiment appears to be bouncing back somewhat.
Tariffs are expected to cause industry-wide toy price increases.
Yeah, slowly and consistently is how they put it.
And here's a direct warning for consumers, right?
Yeah, they basically said hot products are going to likely be out of stock this holiday because we're just not going to be able to refund them.
Oof. So if you want a specific toy, you might need to buy it early this year.
That seems to be the message. Despite these challenges, though, Hasbro anticipates returning to growth in consumer products next year,
What's driving that expected recovery?
driven by what they call a second-to-none entertainment lineup. New products tied to Spider-Man, Star Wars, Avengers Doomsday.
Big movie tie-ins.
Exactly. Alongside a full year of positive impacts from this year's innovations like Play-Doh Barbie and Nanimals.
Nanimals.
Yeah. They also have a strong slate of new toys, including a new line of Peppa Pig toys celebrating baby Evie's birth.
Peppa Pig and Baby Evie, that's a crossover I didn't expect.
Me neither. And retooled board game favorites like Candyland and Operation.
Okay, shifting to the bigger financial picture. How are they managing cash flow and shareholder returns amidst all these strategic shifts and challenges?
Well, through the first half of the year, Hasbro generated $209 million in operating cash flow. Pretty healthy.
And what do they do with it?
They returned $196 million to shareholders via dividends
Okay.
and bought back $62 million of debt, demonstrating a balanced approach to capital allocation.
Their priorities remain consistent then.
Seems so. First, invest in the core business, especially those high-return growth drivers like Wizards and Digital.
Makes sense.
Second, focus on debt reduction and long-term leverage goals. Includes opportunistic debt repurchases and pre-funding next year's bond maturity.
Plan ahead. And third,
Return cash to shareholders via their dividend, which they've kept unchanged for Q3 at $0.70 per common share.
and finally, those cost savings initiatives we touched on earlier, they seem to be really paying off.
Absolutely. Contributing directly to their improved outlook.
What's the target there?
They are firmly on track to achieve $175 million to $225 million in gross cost savings this year.
And they've already delivered.
$98 million already delivered through the first half.
Nearly halfway there already.
Yeah, it reflects strong execution across supply chain, SG&A that's selling, general and administrative expenses and product development, all contributing significantly to that upgraded full-year outlook.
It really is a testament to discipline management, even in a challenging environment.
Mm.
So wrapping this up, what does this deep dive into Hasbro's performance really reveal about the agility required for even legacy companies to thrive today?
Well, it really shows how embracing new technologies, unconventional partnerships,
While also strategically managing those traditional product lines and navigating complex global supply chains.
exactly, how all that can define success in today's rapidly changing market.
For you, the listener, what's maybe the single most significant takeaway from Hasbro's very diverse performance, something that applies broadly to other legacy companies in the entertainment space?
That's a good question. I think you need to consider how Hasbro's playing to win strategy, particularly its deep investment in Magic, the Gathering, and these new digital ventures.
Yeah.
How it demonstrates that the future of play isn't just about what you create, but how creatively you adapt and connect with communities wherever they are.
From the tabletop to the digital screen.
Precisely. So what long-term lessons can be drawn from their navigation of these high-growth segments versus the more volatile consumer products market?
It's a fundamental question, isn't it, about where the true enduring value of play will reside in the decades to come.
And how well traditional companies can actually adapt to a world that increasingly blends the physical with the digital. That's the real challenge and opportunity right there.